Ladies and gentlemen of the crypto space, we're live on Thursday at 11:29 a.m. December 24th is the day before Christmas, but we got to get a stream in because you always have something important to contemplate, something to talk about, and this is what we like to do. This is what I like to do, so this is why I'm here for you today. We're going to answer some last minute holiday questions. Maybe there's some holiday shopping to do. Today's title is Bitcoin, the Bitcoin Rising Tide in the Altcoin Storm, because basically that's what yesterday was. We'll go over some graphs, we'll take a look at Bitcoin, take a look at some of our favorite altcoins, and we'll see the contrast in how their performance was yesterday and what they're doing today and why that's the case, obviously, from a fundamental perspective. And what's the story, what's the narrative behind this behavior? You know me. Let's do it. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial or DeFi. It's the only way to go. Bam! Let's pop it over to the main screen and see who's in the stream. Rick's in the house. Always a pleasure. Happy Festivus. Yes, indeedy. I'm taking tomorrow off, boys and girls. I gotta relax every now and then. My girls will enjoy their Christmas. I have a 2-year-old, and it's quite incredible to see her small face um, so happy when she looks at some of these Christmas imagery and Santa and all this, the little elf on the shelf. Oh, it's just a pleasure. Anyway, Barry's in the house, always a pleasure. Favorite coins, you have to talk Digi. We'll bring up Digi. The Digi narrative has never changed. Digi Byte, from a fundamental perspective, is immutable. How apt a use of that word. It's immutable. The properties are immutable. The blockchain, it has critical mass decentralization, and it will exist in perpetuity. There's nothing that could disrupt it because of how many nodes are out there, how many miners are out there, the hash power, the distribution of the hash power. It's unstoppable. Where adoption, consumption, utilization, development, these are other stories, other realities that we have to deal with. It's not just for a blockchain to have incredible properties and for it to be what it is historically compared to Bitcoin and the rest of the crypto space. Uh, uh, you know, it is what it is. And that's probably the most important thing that I like to remind everyone on the stream. You have to invest in what is, not what you hope to be. So that's speculation. We could speculate on things that we hope to be, and the optimal way to do that is to create a narrative and a story. And then what you're doing is you're taking a bet on whether the story plays out on how you've calculated, how you've envisioned. Uh, Someone who really sees the story and the data so incredibly, Stephen Van Meter, incredible with the way he sees the story. So we tell similar stories in the crypto space and on this channel. And the story for Digibyte is clear. What emerges in my mind is a time horizon that's very large. It's not going to be a short-term time horizon. It's probably mid to long term. Bear in mind, it has the time. There's no reason we have to relegate our portfolio to only short-term time horizon opportunities. But what's important is to understand that long-term time horizon opportunities have to have patience. You have to have proper position sizing. You don't want to over allocate. And in my opinion, there's no reason to expect short-term appreciation. These are not detractors from having a position in the asset. It's just a reality and part of the story that we tell as we try and understand the optimal rationale and logic that go into crafting a well-structured and balanced portfolio. Bam! So that's the Digibyte story. Let's take a look at the chart real quick. Why not? I want to get back to synthetics. I think it's been hot. Let's take a look at Bitcoin denomination for 2 seconds because Bitcoin has been outperforming everything. So it's almost meaningless to look at the chart of anything relative to Bitcoin. It's just GGB, USDT. All right, so let's take a look in dollar denominated prices. Well, the volatility here for me is really an uninvestable asset in the relative short term. So my position is from a long-term fundamental perspective. I obviously have participated in the Digibyte community extensively. I wrote their Android Digibyte wallet. This is a hell of a dip. Look at this wick. That's a horrible sell-off. This kind of candle is called a liquidity event to the downside, where the buy-side pressure collapsed and the downside pressure was overwhelming, driving prices significantly down. This wick, that's an incredible wick to see on the 4-hour. Look at that, down to 1710. Okay, but it's rebounded, and this is a very common pattern we've seen pretty much across the entire crypto space. A bottoming pattern. We've seen, if you go down to like the 15 min, you'll see higher lows, and here's a higher, like, here's, there's a base that's forming, and higher lows and upward trend trajectory. But that doesn't mean anything with regard to taking a position. Fundamentals tell you what to look at. Technicals tell you when to look at it. And unfortunately, just honestly, Digibyte is not an altcoin I expect to outperform in the short term. And bear in mind, this is dollar denominated. So that's what's so interesting. YFI BTC. So YFI is something I've been itching to see below $1. But look at this. Look, it bottomed. We're seeing higher lows, but look at it ram into the 15-min 200 EMA as resistance. And bear in mind, this is also Bitcoin against Bitcoin denominated. So Bitcoin's going to outperform. And we're seeing that across the space. BTC.D, the Bitcoin dominance chart. And if we go over to the weekly, let's see where it is relative to the 200 EMA. Look at that. So Bitcoin is dominating. It is outperforming every other asset. The vast majority. Obviously, synthetics is an asset that was outperforming the other day. It broke down with the rest of the altcoin space yesterday. But let's zoom in. So we had that sim triangle. We had a downward break, and we're seeing that it's hovering above the 200 EMA and the 30-min, which is nice. It's nice to see bullish support, especially denominated in Bitcoin. This is not denominated in Tether or Fiat or whatever. So this is good to see support on a Bitcoin denominated chart. It's not overwhelmingly bullish. This is a defensive type of position. We had a bearish break of the symmetrical compression, and we're seeing support held. That's defensive. Offensive is a break to the upside through a 200 EMA, a retest, and then a higher high. So this is on the defensive. So charts like this, even the most bullish of altcoin charts denominated in Bitcoin, are really still indicating it should be a Bitcoin position if you're looking for portfolio structure and positions to outperform. Bitcoin is going to outperform. That's just the name of the game. Rick says, name my son after Irish whiskey. Ooh, that's right. Guess we have priorities. Yes, indeed, my friend. Brendan says, do you think REN protocol will be seen as a huge security or utility token? REN is overwhelmingly a utility token, and I'm not too worried about the SEC even for the governance assets. These platforms are literally using them for governance. It's a whole nother category it's not even remotely comparable to what's on their radar. It blows the logic and rationale of their arguments and discussions out of the water. No doubt we'll get into legal technicalities, which I don't want to dive into at the moment, but they are literally used for governance, and the value of them is secondary, and that is the approach that they have taken. So I'm sure that'll be a complexity nonetheless, but that is the approach that was taken. Let's take a look at REN. REN BTC for just 2 seconds because Bitcoin is outperforming. But look at that bottoming pattern. We see the higher lows. We're seeing that across all assets. We saw it against synthetics, even saw it against Digibyte. But that's the same thing. And now that's the bounce off the bottom. Whether it's a dead cat or not, who knows? If Bitcoin has an end of year breakout, bet your bottom dollar these are dead cat bounces. Now let's take a look at REN versus USDT. So dollar denominated is doing quite well, and I hope to see it still in its symmetrical triangle formation. Zoom out to the 4-hour. Look at that. Look at that. So when things like this happen, this is a perfect example. You see this? This is called an aberration. It's a deviation from the trend formation for only a period of time. And that's supported at least in the 4-hour chart thus far because it broke down, wicked down, broke back into trend formation, and you see the red final candle showing support. You see there's a bit of a wick there. It's not really hitting the trend line. So this does have the feel of an aberration to the downside, and trend support is holding. Now, obviously, that's a speculative statement. It still can break down, but it's common, and this is why you can't really. This is why trailing stops. You have to have some some percentage applied because you have these um, uh, price is not specific. There's price ranges, and things are not. This is lines on a chart uh, are not exact. They're just observations, and the point being is to highlight trends and likelihoods and possibilities and potential. So nothing is exact, I guess, is the best statement in that regard. So, Rand, from a fundamental narrative perspective, um, you're thinking with regard to the lawsuit, but bear in mind, uh, uh, XRP was a massive target. It's also a multi-billion-dollar asset and is involved with international corporate remittance. So that's big. That's prime for corporate warfare, where other corporations they're injecting themselves into the business of some of the largest corporations on the planet. So those big old school financial names calling friends in the government to get actions taken. This is par for the course. Who knows what the outcome is going to be? All I know is from a technological perspective, XRP is meaningful. From a fundamentals perspective, I'd argue it comes up short, especially compared to decentralized platforms. But that's not necessarily a bad thing. From a technological perspective, XRP is meaningful, has the potential to be very disruptive. XRP, really? Yeah, let's look versus Bitcoin. But from a technicals perspective, which is what's most important to many persons that listen to me and on crypto Twitter, it's untouchable. This is an untouchable asset. Uh, if you're going to take an incredibly speculative position, this is only a tiny, tiny percent. Listen, even Ren and even synthetics and even the awesome assets, I tell folks you only need 1% of your portfolio, guys. This asset, 0.2%, a tiny, tiny percent. The asymmetric returns are enormous. If this thing has a good result from the SEC, and it has incredible asymmetric returns, you don't need a large position at all. So that's the most important thing to remember, and that's the biggest story that I could tell you guys on Christmas Eve, is that you don't need large positions in order to have an incredible effect on your portfolio. In the case an asset experiences asymmetric price appreciation. So that's the name of the game, my man. Rick, can you continue the narrative that you ended the stream with yesterday, MMT and the conservative policy? Sure. Ben says, awesome live stream as usual. Ben says, Happy Christmas. Thank you, thank you. Always a pleasure, always a pleasure. So, well, MMT, I posted on Twitter the other day, the only thing the government can do wrong is try and do just enough. And that's just my opinion, based on listening to people like Raul, Brent Johnson, Stephen Van Meter, Lynn Alden, George Gammon. I just think doing just enough is literally the only wrong course of action, which is what the bills that they tried to pass are doing. Just printing two and change trillion dollars, and I think that's the only thing that causes a problem. Either Rand Paul is right, where you should be fiscally conservative and try and save the dollar, because printing $2.5 trillion is going to debase the crap out of the dollar. We're literally destroying the dollar. That's the direct repercussion of printing that quantity of bank reserves at the M1 level. And that's crazy. So I don't know if everyone in Congress is overwhelmingly financially astute or listens to these important macro minds. But to me, there's only two possible. I'm an extremist also, so I overwhelmingly think that you go full on fiscally conservative and you try and save the dollar, where you start paying down the national debt and you start spending less than you make type stuff. Or you go full on MMT. And MMT, you can print whatever you want. And, from a reductionist perspective, for MMT, you can print $100 trillion. What's pertinent is GDP. The amount of capital you print is balanced by the amount of productive activity of the society. So if we print, let's not even talk in fixed numbers. And I like this idea, and I think there's probably merit to it financially. I'm not in a position to crunch the numbers, but if they literally print the salary of anyone and everyone that wants employment, and the government employs everyone for purposes of rebuilding the country, rebuilding every piece of infrastructure, rebuilding the entire national energy system, factories, refineries, all the mining that's required for the battery metals, lithium, cobalt, nickel, graphite across the continental United States and controlled territories around the world. And what was the last thing I was thinking? Oh, and factories as far as the eye can see. And then we become the manufacturing powerhouse of the world because we're able to print $50 trillion a year and employ every single human being. The only way that works is if GDP is up 200% a year, 300% a year. And that's what balances the MMT equation. So I know there's economists out there that know that. I don't think the politicians know that. At least they don't talk about it, because I know the macro financial brains talk about it. I've heard plenty of people talk about it, which is exactly why I know about it. I know that you can print whatever you want as long as GDP is ramping into the stratosphere. So let's get the show on the road already, boys and girls. Come on, Congress. Either ramp GDP through the stratosphere, print however much it takes, it doesn't matter because it's just funny money, it's monopoly money, or Rand Paul, get your freaking fiscal act together and be fiscally conservative, which I like both. I like both. As I said, I'm an extremist. I like both. My man, that's the story, Rick. That's my opinion on that. Brendan, you're welcome. Derek says eGold has a steady trend going. eGold and Elrond, as compared to other smart contract platform or potential smart contract platforms, compared to Cardano. Elrond has smart contracts before Cardano. That is meaningful. I think that puts it in a position to gain traction more so than Cardano. Everything with regard to investing and looking at assets is talked about in terms of more likely or less likely. And one of the most important properties of smart contract platforms is total value locked. Now, Ethereum has all the value right now. It's the only smart contract platform with developer and DeFi activity. Cosmos and Polkadot will be there. It's inevitable at this point, considering the quantity and rate of development. The only way another platform comes in and gains market traction is it has to have smart contracts. Elrond has smart contracts now as compared to Cardano, which has yet to have smart contracts. You can only have total value locked if you have the contracts required to manage the funds. So as of right now, there is no value locked on Polkadot. There is on substrate blockchains, which are Polkadot parachains. There is no value locked on Cosmos hubs. There is no value locked on eGold. But bear in mind, there is a bridge, so there is substantial value, and there is that interop component. So you need the contracts for the financial management and DeFi applications, Web3 applications. You also need, what was the thought? You need the smart contracts, you need the TVL, and all these things are kind of like the perfect storm. They have to come together at the same time because the most important thing is network effect. Because when something gains traction, it continues to gain traction and it remains out ahead. And that's why Ethereum is what it is. It will not be disrupted no matter how awesome a competing platform is. That's why Bitcoin is what it is. even though it's technologically inferior as compared to coexisting blockchains, particularly Digibate. It's not better technologically. Will another UTXO platform disrupt Bitcoin? I highly doubt it. It doesn't make any logical sense why that would occur. King says, Noah, can you speak on the idea of borrowing against assets instead of liquidating? What is the best way to pay back a loan if I do not have much fiat income? Well, you should not be taking on debt if you don't have a revenue stream, because there's risk associated with taking on debt, because you're taking your assets, you're using them as collateral for a debt position. So I would not try and take leverage. If you're in a position where you don't have much income, I know it's nice that an asset could potentially generate income, especially leveraging it, but that's risk. The most important thing for me is minimize the crap out of risk. There's no point in trying to capitalize on additional leveraged gains if you're taking on unnecessary risk. In a situation of low income, you want to protect your value as much as possible. And that's just the way my mind is. I'm a very risk-off person, risk minimized. When I do leverage debt on MakerDAO, I have over 300% collateralization. I want no chance of liquidation. So that's my opinion and my perspective on the matter. What I would say is the appropriate course of action from a portfolio management perspective is you need to work on the income stream. And I know that that is another complicated topic. And I myself am a software engineer for 11 years. I built Android apps for the largest corporations on the planet. I currently work for Royal Caribbean and do work for Facebook. Um, so I understand this is a heck of a year with regard to revenue stream and employment. And I feel for many people, and I understand exactly what you're saying. But you need a healthy revenue stream um, before considering taking leverage. Don't take on risk. Protect your gains. You work too damn hard to accumulate the assets that you have, and that is my opinion on the matter. Don't take on risk. And that means altcoins. Folks are gambling. Don't gamble, guys. You might be tempted to because there's the lure of potential freedom, economic freedom, that is, but it's not worth the risk, guys. It's not worth the risk. Gambling is gambling. These altcoin positions, you really only need small percentages of your portfolio to achieve asymmetric returns that are going to change your portfolio forever. You get a 10x, 100x, that changes everything, guys. And then what you do is it's not easy. I don't have I don't have the answers to everything, but what I have is the story, the narrative, and the conversation, and I hope it helps. Rick, my man, always a pleasure. Derek says the big thing this year is sharding. Well, yeah, that's the distribution of blockchain, of block information, very high level, if it's even accurate. But that's what Ethereum 2.0, and this will facilitate speed because now the entire blockchain does. It reminds me of like a RAID from a data storage perspective. It's like the entire blockchain does not have to know the entire blockchain. Like right now blockchain is RAID 1. Every single node has a copy of the blockchain, where sharding is all the shards have the entire blockchain history. But every node doesn't have every shard. So that's the logic in that from a very high level and general perspective, to the best of my understanding. Anyway, let's take a look at Bitcoin real quick, ladies and gentlemen, because Bitcoin during the holiday season is on trend. It barely has depreciated at all. We have an altcoin meltdown. This is the opposite of DeFi summer, where you look at like the 24-hour price chart and take a look at this. It's basically negative. It's just painful to look at. Everything is down 20, 30, 40, 50%. And obviously the tragedy of XRP, which is down like 50-ish percent, 45 to 50. So this is why, is because Bitcoin is outperforming everything. So, folks, I strongly encourage folks. I know Bitcoin is at 23,500, give or take, 23,300, and but this support here is incredible to see. And look at it on this trend line. This is an obvious trend line, higher lows. Um, Gone through a couple of different symmetric triangle formations. We thought it was going to break down, but this purple, you got a purple line here, which has flipped support and resistance a whole bunch of times. We got our purple line up here, which is basically the upper bounds of all-time high, and we have this pink line down here, which is a line where these dips rip to. Look at that rip. Look at that wick to that line. Boom, boom, boom. And what's interesting, what I love about price action support, look at this. Look at this wick to this pink line. Look at that wick to that pink line. It's so weird, so strange. You can imagine psychologically how this actually plays out. That this pink line literally had a psychological, so much psychological confluence amongst so many people that the price actually bounced here at two completely separate times. It's just fascinating how these lines on the chart relate to and are a manifestation of prevailing psychological trends. Look at that. Incredible. So, I mean, look at the price action 23,300. It's overwhelmingly just hovering below all time high. Um, so, what we could end up seeing, I mean, look, there's a large oscillator reset on the 4 hour. So Stoke is like pressure. RSI is if you get a rip towards 70, 80, that is incredibly bullish. RSI tells me the velocity. This is like acceleration. Stoke, if you want like a physics analogy, the way my mind sees it. This looks really good. Look, there's a higher low on the Stoke. RSI is in the 50s, right at 50. This is kind of like in no man's land. That's exactly from an oscillator perspective and from a price action support and resistance perspective. The price action right now is in no man's land. It really looks like it could rip to the upside incredibly, and I don't see the pressure for aggressive downside price action, particularly because we've seen meaningful downside price action, and it holds support incredibly. Did you know that Michael Saylor bought on this line right here, 21,000 and change? This is where he for MicroStrategy. This is where he bought like the 50,000, the $650 million worth of Bitcoin. He literally bought on the wick down. Can it have been any more perfect of an entry? Um, I don't think so. Absolutely incredible. So look, this is what we're looking for. This is what we're looking for from the horizontal price action. It is oscillator reset, which is basically fuel. That's the way to look at it. So look at this. Look at this Stoke rounding bottom. And look at the RSI, guys. Ooh, this might be one heck of a new year. You have an RSI that's really close to 70. You have a rounding bottom. We're above trend formation. We're above price action support. We're ranging horizontally between all-time high and variety of very interesting price action levels. Yep. From an oscillator perspective, from a price action support and resistance perspective, this is a very interesting chart. On the weekly, the oscillators look horrible. But this is where the weekly may not be most useful. But when you look out to the monthly, look at that, guys. Look at the RSI, and this is what Plan B talks about. The RSI is almost 80. So when we had these rips back in 2017 with these massive monthly wicks, the RSI was a blast off to 100. And Bitcoin is relatively new, obviously, 10 years. So the monthly chart is small. But look at this. This is a measurement of the data on the monthly chart. And when Bitcoin rips, the monthly RSI will rip to 100. And that's going to be some seriously bullish price action. That's not going to be $100 candles to the upside. That's going to be $5,000 candles to the upside, day in, day out for 6 months. That's what the deal is, boys and girls. What am I missing in the stream? And I'm going to wrap it up in a second. Uh, Devore says, Noah, have you noticed that we, as Bancor LM liquidity providers, LP providers, still do not receive any rewards of B&T? They're not stalling. It's governance and it's a development process, and it is what it is. The odds are the fees are accruing, accumulating, and pending smart contract iteration, which is basically the development of the contracts and the deployment of the software and the governance proposals to deploy them, it will come. Yes, you are correct. The rewards do not show. They do not show for me as well. If we go over here and we go over to protection, I don't see anything, but I've been providing a little bit of liquidity. The bank card chart is just like every other altcoin asset relative to Bitcoin. Bitcoin's outperforming. You can't touch these assets. You're getting destroyed. So what that basically means is you own the Bitcoin. You don't own these altcoin assets. Now, bear in mind there will come a time, just like the summer of 2020, where altcoin assets outperform relative to Bitcoin. And synthetics had a little taste of that yesterday, but the summer was crazy. The summer, everything was ripping 20%, 20%, 20%, 20%, day in, day out. Absolutely incredible to see. Really? They don't show it anymore? You don't have the historical Len chart? That's unfortunate. Nope, you gotta zoom out. I don't think this is gonna show Len data. Anyway, but obviously Len, the original Aave token, ripped 8,000% this year. So the DeFi summer was absolutely incredible to see. Hope for the best, Davor. Yes, I don't see any, but that's the whole point. Don't take on unnecessary risk. Small percentages of your portfolio. I understand from an LP perspective, but look, I'm not providing. I have more comfortability with Curve, hence the leveraged debt position applied to their compound pool, and that's just a feeling, a conclusion we all have to come to individually, how much liquidity to provide to each platform. Now, I also wanted exposure to Bancor. But from a fiat perspective, from a dollar-denominated stablecoin perspective, I mean, Curve is the way to go. Curve is basically the forex of the crypto space. Absolutely incredible with Curve. Let me see. I believe I have some yield that's due to me. Let's take a look real quick and show you guys what it looks like. Oh, I keep clicking the wrong thing. Sorry, guys. Yeah, there you go. So 121. That's nice. Nice little yield for providing VECRV. Everyone says altcoin season, spend your money. I feel happy I haven't moved anything in the past 2 to 3 months. I haven't touched the large structural components of my portfolio in weeks, if not months. Find your positioning, folks, and you'll find that you won't have to restructure your portfolio. Watching everything go down, and I'm chilling. I'm watching altcoins go down, and I'm watching my portfolio barely budge. I think my here, let me take a look real quick. I'm down 4.21% for the week. And that's in an altcoin denominated portfolio. The Bitcoin portfolio is up 12% for the week. I have another altcoin portfolio that's skewed because StakeNet is showing it's worth $1 billion. So I'm down 5%. So you know what? Every 3.86 now in the refresh. So while the vast majority of the altcoin space is down 20, 30, whatever percent, because that's down 3%, considering the Bitcoin appreciation of 12% for the week, the portfolio is actually up for the week. So manage your risk, do appropriate position sizing. And never go all in, never spread too thin. And man, those altcoins, they have asymmetric return potential. You don't need large positions to change your portfolio when there's a DeFi or an alt season or the old school UTXO alts come out of the woodwork and start performing again. You need small positions, and it could really change everything. So don't take on excessive risk during the holiday season. Protect your hard-earned gains. You work too damn hard to gamble, boys and girls. Listen, it's 12:04 p.m., December 24th, Christmas Eve. I wish everyone a wonderful Christmas. I'll be back on Monday. I'll be here, boys and girls, so think of your questions, and the stream will be here. I wish everyone a wonderful day, a wonderful holiday. Smack those thumbs up buttons. Tell everyone to subscribe, and I wish everyone a good old day. Peace.